The Dow-to-Gold ratio is about to break a line it's only crossed before 1929, 1973, and 2008. The last three times it marked the start of an 18-month recession or worse, a depression. Is 2025 next, or have we just entered the crash that rewards those holding hard money? Gold just ripped to fresh all-time highs, printing above $4,200 an ounce. And silver punched through $50. That's not inflation go burr. That's confidence cracking. Markets are now baking in another rate cut this month, and cuts don't print trust. They print Bitcoin rocket fuel. Send it! Here we go. When this ratio dives, history says capital is running downhill from complex levered paper claims to hard money you can actually hold. And this cycle is obviously weird. Stocks up, gold exploding. That combination is rare. Optimism hedged with fear. Maybe everyone is stuck fighting the last war, and they don't realize what's really happening.
And the big takeaway is this. Most people are stuck fighting the last war, right? And in our case, that means most people are expecting a market crash like we had in 2008. That's the last war. Maybe they're looking at 2000 or whichever period that you want to look at. But those were different. Those were deflationary crashes. A housing market crash, a credit bubble crash, a stock market crash. But when these markets crashed, we saw stocks drop, right? By more than 50%. Home prices, they collapsed 30 to 50%. Banks failed, unemployment skyrocketed. That's what happened. And as painful as that was, on the other side of all that, we saw huge growth, right? Because the crash was sort of like a reset button. After the crash, if you still had cash, you could get back in, right? You could buy that home, you could buy the stocks much cheaper, and then you could ride the recovery back up.
It's actually the perfect setup, because guess what? If the bubble is in money and treasuries, prices don't come down to you. It runs away from cash.
Now, these companies, they feel safer, right, than holding dollars. So people pour money into them as sort of like this pseudo safe haven, right? Then you can look at like other areas like the crypto NFT market, especially like crypto punks, right? People are spending serious money on digital avatars. Like what? Why? Well, the reason is because when the underlying currency feels unsafe, then you're willing to just basically leap into anything that gives some sense of scarcity and value outside of fiat. And then, of course, there's Bitcoin and gold, right? The main beneficiaries of capital flight right now today. We just looked at how Bitcoin's up 185%, right? That's since December of 2023. Gold's up 95%. Now, the fact that these digital and metallic safe havens have outperformed the bulk of traditional assets isn't an accident, right? On-chain flows confirm this. The massive inflows into Bitcoin are often predictive of future returns.
Listen, when the foundation is the bubble, everything built on top, stocks, pensions, salaries, they all become unstable. That's why this time can be worse, even if it doesn't look like 2008.
Right? It's in the one place that everyone thinks is safe. It's government bonds and in the dollar itself. Now think about it. The U.S. Treasury are supposed to be the safest asset in the world. The dollar, it's the foundation of global trade. But today, both are being inflated by trillions of dollars in new debt and endless central bank printing. The U.S. government is borrowing over $2 trillion a year just to stay afloat. And the only buyers that are left are the Fed and passive flows that are forced into treasuries by regulation. Now, there's a recent report that came out by Mir McCann Research, and they put it bluntly. They said, quote, "The current bubble is not like 2008, which was a credit bubble. It's a currency and treasury bond bubble. And when the foundation of the entire financial system is the bubble, then everything built on top of it, stocks, pensions, real estate, even the paycheck, becomes unstable." End quote. This is why I'm saying this crash is going to be worse than 2008.
Here's the nuance nobody wants to hear. Gold up while oil crashes isn't classic 70s stagflation. It smells like a dollar funding squeeze in the pipes. An engineered insolvency rolling through balance sheets. It's possible tariffs plus tight liquidity can push a deflationary debt spiral, even as headline inflation lingers. That's how you get gold moaning with growth wobbly. The historical rhyme here isn't the 70s oil shock. It's the trust shock.
We can pull up the chart of gold priced in Bitcoin. This set off an absolute firestorm. So just so we're clear, I like gold. I understand why people own gold. I think of the gold bugs and the Bitcoiners as brothers in arms against the fight against currency debasement. I'm sympathetic to their cause. I think they're sympathetic to our cause. I have a lot of friends who own gold. I'm not a gold hater. But I'm also, somebody say, a math guy. I like looking at the data. And so over the weekend, I messaged Phil and I said, hey, Phil, can you create a chart of gold priced in Bitcoin? And I knew that the gold bugs were not going to like it, but I thought it was an important contribution to the public conversation. So Phil cooked in the lab, made up the chart. I tweeted it and I said, gold has been a disastrous investment. I think disastrous investment probably got people a little upset. That's okay. It's true. Priced in Bitcoin, gold is down 84% since January of 2020. So if you compare that, the S&P is down 88% priced in Bitcoin since 2020. That's pretty much no difference, right? Now, gold, yes, in dollar terms is up a lot. It's up 50% this year, but it was pretty much flat through a number of those early years of 2020 till today. And so my point being that gold still has some inflation to it, and Bitcoin is a finite asset. That finite asset, yes, there is this disinflationary supply, but Bitcoin is actually the measurement stick. It's the Bitcoin rate of return. So gold's Bitcoin rate of return is negative by negative 84%. So if you are an investor, has gold done well? Sure. So if you had an apparatus of assets to choose from, you put stocks, bonds, real estate, gold's done very well. But if you then add in Bitcoin, you pretty much didn't need any of the other assets. Bitcoin was the dominant one. And so a lot of people say, well, just buy both. Well, that is kind of like a safe answer, right? It's kind of like, oh, put 1%, right? But in reality, the data is overwhelming. Bitcoin destroys gold in terms of a return. If you denominate gold in Bitcoin, it loses tons of its purchasing power. Doesn't mean that you should go and buy only Bitcoin. I understand why people still might want to buy gold, right? There's all kinds of things around drawdown protections, all this kind of stuff. But if you are purely looking for which one is going to outperform on a return basis, Bitcoin versus gold, it's not even close.
Central banks sprint to gold not to get rich. They're sprinting because fiat is dying.
I believe that the single biggest issue, if you can correct this one issue, it will have a profound impact on people's lives around the globe, is if you can basically stop the debasement of the currency. If you can stop that, then all of a sudden now what you do is you stop this silent theft, and now you allow people to actually keep the economic value that they've worked hard to earn. And so Bitcoin to me is the solution to that problem. There's kind of this heuristic of people have been complaining about this for decades, centuries, right? If you go back through all these societies, Bitcoin is the first technology solution to the problem. And so I think that is a very profound solution that is going to have an impact that we quite don't understand yet, frankly, right? So I think that's one big problem. The second problem that I'm very interested in is this idea of the little guy or the quote-unquote retail investor being able to get a level playing field against these large institutions. And I think that those two issues are very interrelated because now what we know in this country is you can't be a saver, you need to be an investor. As these retail folks realize I have to become an investor, they need access to information, they need access to the market. So that's my focus. That's where I think I'm most passionate about. That's what I'm most intellectually stimulated by.
Gold rings the alarm, and Bitcoin builds the exit. When confidence cracks, capital doesn't disappear, it retreats. From complexity to simplicity, from paper to hard assets. Cash first, then gold and silver. And in the digital age, Bitcoin sits right beside them for portability and self-custody.
By the way, it's interesting what you say. The fact that for the regular guys that are trading after hours are like, what do I mess with now?
They don't have access to anything.
They don't have access to anything. What they do with crypto, you can track what Bitcoin's doing.
Gold's closed, stocks are closed, bonds are closed, everything is closed.
Oh, wow.
Now, here's the thing, is Trump on Sunday night, I posted this meme. It's like abracadabra, make the markets go back up, right? And what does he do? He tweets out an hour and a half before a futures open on Sunday night. Like the guy knows what he's doing. And so that's fine. Understand that. But I think the bigger thing about crypto and Bitcoin in particular is if you sold your Bitcoin because of geopolitical uncertainty, you had no clue what you were holding. The whole point of Bitcoin is that it is a non-sovereign asset. It is supposed to be the safe haven that you can go and hold regardless of what any government in the world does. And so I think that's part of what people are trying to figure out now is the hardcore Bitcoiners, they know that. They're looking to buy on dips, but you still get tons of new people who come in. And obviously, leverage plays a huge part of this. And so the big story over the weekend was there was $19 billion of leverage that got wiped out. Now, you can look at that as how the prices went down. The way I look at it is we just reset the entire leverage in the system, and therefore that probably clears us so that we can go higher.
Say that again. Non-sovereign. And that word matters now more than ever. So what does the policy endgame look like when no one wants long-duration dollars and the Treasury still has a tab to pay? Oh man, we have absolute heat coming from Luke Groman. He's about to blow your mind, but before we bring it home, look at our likes.
3 or 4 times, maybe.
I gotta pump those numbers up. Those are rookie numbers in this racket.
Let's take a quick second for our sponsors who keep this show on the air over at the Bitcoin Way. If your wealth lives in their system, it's not yours, it's theirs. That's why we scream Bitcoin. That's why you self-custody. And that's why you call our friends over at the Bitcoin Way. They'll walk you through multi-sig, self-custody, privacy, how to run a node, and the tools that keep you sovereign when the fiat system pulls the plug. Don't wait till it's too late. Book a free 30-minute consult today using that link in the show notes. Need cash but don't want to sell your Bitcoin? Ledn is the global leader in Bitcoin-backed loans, issuing over $9 billion in loans since 2018, and they were the first to offer proof of reserves. With Ledn, you get custody loans, no credit checks, no monthly payments, and more. Visit learn.ledn.io/simply to learn more and get 25 basis points off your first loan.
What Bitcoin did, I would have guessed it had been a couple of years ago. We were talking about inflation coming back. In fact, I think it was when inflation was still relatively high. But you said that it's not a 0% chance that we go to like 40, 50% inflation. Do you still think that's on the cards?
I think only. I think there's still a risk of it for some period of time, simply because of the level of debt in the system. You know, all the great inflations that you see are not because, oops, the central bank was too loose and the economy ran too hot and inflation suddenly went to 40 or 50. That's not how it works. Mm-hmm. It's the great inflations are, we have debt to GDP of 120%, and our foreign creditors are not buying our debt like they were, either at all or certainly relative to the new deficits. And our deficits are 6 to 7% of GDP. And then we have some sort of crisis. And when we have the crisis, receipts fall, interest, doesn't fall. Foreigners sell bonds to get liquid, and the rates start going up in your crisis, and you go into a debt spiral because of the level of your debt, level of your secular deficits. And then the central bank and the government faces a choice, which is simply, do we stand aside and default on our obligations, or do we print money to keep our debt nominally money good? And it's those times when governments are printing money to keep their debt nominally money good that we've seen the greatest inflations in history. And of course, the numbers I just laid out were the numbers of the United States. Mm-hmm. And so, yeah, is it possible? Sure. Is it my base case? No. But it would depend on events. It would, if we get a crisis, we get a recession where receipts start to fall, GDP starts to fall. GDP falling with debt to GDP and deficits where they are, structural deficits, it's not a policy option. You start to see, and importantly, we've seen hints of this. We even saw it earlier this year, where, if you remember, part of the plan, right? We're going to do austerity, and we're going to Doge, and we're going to take some pain. Mm-hmm. And Besant's going to scare stocks into bonds, and he's going to get the 10-year down. Judge us by the 10-year. Judge us by the 10-year. I think this was February he said this. And then we start moving toward, we weren't even into Liberation Day yet. We were just into March. And stocks are going down, 10-year yield's going down. So far, so good. And like 10 days in, all of a sudden, stocks keep going down, 10-year yield starts going up, and keeps going up, keeps going up. And then we do Liberation Day, and it like comes down for a cup of coffee and then takes off like a scalded cat higher. This is emerging market with a fiscal crisis, having a recession, trading action.
Translation: when buyers vanish, the market forces the Fed and Treasury to choose inflation over a cascading default, regardless of however they decide to rebrand it.
All the QE inflation that was, all that was feared and never arrived,
is coming
like a freight train, as our friend Lynn would say. So, and again, this was always in the cake. There is no, the math is the math. And that's why I say the events, like you need to protect yourself. Like this, we all enjoyed the party, whether we voted for it or not, right? Boomers and silent generation are getting 70% of record tax receipts and entitlements. And yes, they did pay into that. They didn't pay that much for it all. Mm-hmm. There's been inflation of services, et cetera. They're taking out more than they put in. That's why the deficits are what they are. And oh, by the way, our politicians spent their money as they put it in. They're spending our money as they put it in. So yeah, I mean, it's somewhat cliche. Like, yeah, you need to own gold and Bitcoin, but like, you need to own gold and Bitcoin. We're in that part of the cycle. It just is what it is. And I hope, after it's over, then, I can leave a note in my will for my grandkids or great grandkids and say, listen, there's going to come a time around, 2085 and you're going to want to start buying some gold again. And I'll be done with it for the rest of my life. And, it's the arc. That's all it is. Gold and Bitcoin is just the arc to get you through this monetary storm, this monetary flood. And I write about it a lot more because that's what's happening. Mm-hmm. It's accelerating. Like, the water's up to my knees and still coming in. It's like, well, okay, get busy building the arc faster.
Gold is the alarm. Bitcoin is the arc. In 1929, 1973, and 2008, the ratio warned before the narrative did. 2025 rhymes, but this time we have Bitcoin. Gold is telling us the house is on fire or that the flood is coming. Well, Bitcoin is the fire escape or the arc, whichever you prefer, but stack smart, custody right, and remember, up only is Max Payne when the herd is still in denial. Oh, and hey, do you know where you'll be able to find people helping to secure and build that arc to a prosperous future? Mining Disrupt 2025. Get those tickets to Mining Disrupt 2025. See the future of Bitcoin mining up close in Dallas, Texas, November 11th through the 13th. The biggest names in the industry. Cutting edge rigs, Bitcoin, and AI integration, the signal you won't get anywhere else. Grab your tickets today and use promo code SimplyBitcoin for 20% off, and we'll see you there. Hope you all enjoyed this one. Let us know what you think below, and don't forget to like, subscribe, and give us a pat by sharing the Sound Money Gospel. Set those notifications for the best in Bitcoin news delivered to you daily. Dante, Sophie, Oceans, they got a lot coming your way, so stay tuned. Hey, I love you guys. See you Monday. Peace.
If you prefer to go down with the ship, you.